Hey everybody. Peakbot has started issuing alerts for the indices SPX, XSP, Triple Q SPY, NDX, and IWM on a daily basis. These are for Iron Condors. Iron Condors is no more than a put credit spread and a call credit spread put together. You enter them today with the expiration tomorrow. I wanted to be able to put together a video that would show you exactly how to use these alerts in order to get you paid. All right, let's get into it. What you'll see on the screen is we'll do the Triple Q trade idea first. We want to sell the put strike of 491 and buy the put strike of 490. This creates a put credit spread, 490, 491. We also have the sell leg or sell contract of a call credit spread at 497 and the buy strike or the buy contract at 498. Okay, so we've got 490, 491 on the put credit spread side, 497, 498 on the call credit spread side. When we go to the option chain, we're going to go to these same numbers. We said we had 490, 491 on the put credit spread side. Let's go to the option chain for Triple Q. You'll see here we have the spread on vertical, and we're going to go to the 490, 491 on the put side. We'll look for this spread. We can select under the bid column. We select, it says 0.13. We're going to see that this number changes once you select it. We're going to collect $15 here for the 490, 491 put credit spread. We're collecting $15 in premiums. When you like that, you hit confirm and send. It says here max profit is $15 and max loss is $85. That is because you take the 100, subtract $15, and 100 comes from the one spread between 490 and 491. That's a one spread times 100 shares is $100 you will use for collateral. Subtract that $15 here and your max loss is $85. We're going to send that. Then we go over to the 497, 498, which was the call credit spread trade that was suggested on the Iron Condor alert. You're going to select the 26 under the bid column. Actually, it comes up as 27 here in payments. Basically, you're going to collect $27 in premiums for this call credit spread. You like that? Confirm and send. It shows $27 collected as your max profit and $73 as your max loss. We can send it. But what I want to say here is your max loss is reduced by the fact that you have a put credit spread and a call credit spread. We collected $15 for the put credit spread and we collected $27 for the call credit spread. Putting those together means that we've collected $42. When you collect $42 in premium on a one spread, that means your max loss is $58. Before we saw $73 and $85, but really our max loss is only $58. You collect $42, your max loss is $58. All right? That's the Triple Q trade. I want us to now go and look at another example. Let's go to XSP. XSP is a cash settled equity. It is the mini of SPX. And what we have here is 559 as the sell leg of the put side and 558 as the buy contract of the put side and 563 as the sell leg of the call credit spread and 564 as the buy part of the call credit spread. We're going to go to the option chain now, putting XSP into the option chain. Now let's look at XSP on the option chain. We had our strikes there, 558, 559 on the put credit spread side, 558, 559. You've got the bid column. Go ahead and select it. We're going to collect $13 here. We can confirm and send. And then we go back to the other side where we had 563, 564 was suggested from alerts. Select that, $28. We're collecting on the call credit spread side, 563, 564. Confirm. We see here $28 collected, $72 max loss. But again, our max loss is not that much money. We collected $13 on the put credit spread side and $28 on the call credit spread side. Putting these together, we've collected $41. in premiums, which means our max loss is $59 because you take the $100 for the spread, subtract the 41, and your max loss out of your potential pocket is $59. So hey, if you want to elevate your learning of credit spreads, I do have a resource, a training resource for vertical credit spreads. I'll put the link down in the description, and you can grab that and be able to go a lot deeper into credit spreads and how they are going to help you to generate nice, consistent profits. All right, check the link in the description. All right, let's look at one last example. I want to talk about SPX. Now, I want to make a disclaimer right here. SPX is S&P 500. It is what we call the Big Daddy. It is a 5 spread, which means it calls for a $500 collateral. Right? You do collect more premiums, but I just want you to know that when you enter this trade, you're looking at up to $500 of collateral to be used. We've got 55.90 as the sale contract on the put credit spread side, and we've got 55.85 as the buy contract for the put credit spread side. Again, this is a difference of 5, which is where that 5 spread comes from, which is the $500 of collateral. We're also we're selling a call at 56.35 and buying a call at 56.40. Okay, let's go to the option chain. Okay, on the option chain, we're looking at SPX, and we've got 55.85, 55.90 as the put credit spread. Go to the bid column, click the button. We're collecting $75 in premiums here. $75. Our max profit is the 75 and our max loss is the 425. Okay, I want to send this. Then we're going over to the call credit spread side to the 56.35, 56.40, which was what was suggested by the alerts. Select that. 115 or 1.15 is there. Collecting $115, max loss 385. But just like on the others, we've collected a total of $190. 75 plus 115 is a total of $190. The max loss then is $310. The 500 minus 190 leaves you 310. That is your max loss, is the 310. I want to say here, again, I'm going to add to my disclaimer about SPX. We're talking about the S&P 500. It is the big one. If you're not comfortable with credit spreads, or you're not a seasoned trader, or you're one who watches SPX regularly, I would not suggest that you start off trading SPX. If you want to get into the practice of credit spreads on these 1DTE alerts, I would suggest first of all, I suggest you go into your sim and use your paper trading account. If you think you're ready to go live, I would suggest you do XSP, Triple Q, use one of the others that you can utilize to go ahead and get comfortable. I am a huge fan of credit spreads. You all already know this. Anybody who follows me knows that credit spreads, I believe, is the best way to grow a small account. If you don't know anything about credit spreads, though, I would suggest you get my training, which is Vertical Credit Spreads. It's available at my website, educatortotrader.com. All right.